Hi, this is Chuck, better known as Low Trade. I haven't done a chart in a while, but tonight I'm going to attempt to do a evaluation on CDNL, Cardinal Resources. It's an OTC Pinky limited information company. Okay, when I first look at a chart and technical indicators, I don't really see price movement as much as I see people that are involved in the stock. Now, if this is the first time I ever looked at this stock and I looked at this chart, within 5 seconds I would say that everyone involved with this play over the past 2 months or so has reached a point of indecision. All their previous thoughts have reverted right back to what had happened prior to the start. Now let's see how, just looking at the chart, let's see how I've come to this conclusion in a couple seconds. To start with, back here, you can see that the price is just walking along the bottom. That's a null in mindset, okay? People's mindset about this stock was at a null. There was no decision. Okay? Now, right here where you have your price and volume spike, something happened that caused these people to think that, hey, this stock is going to really do something good. Now, it very quickly formed a very short time pennant pattern. And a pennant pattern is a positive pattern, meaning that normally what happens is the pole will form, giving you a target of where the price should continue after that initial mindset change from null to positive. Well, you can see right here as it came down and came up and formed that pennant flag on the thing, instead of breaking north like it should and going up to here, it continued right back down here to the bottom where it started at. Okay. This being an OTC stock, I think about the chart pattern in a different way than if it was a big board stock. Now, mainly I'll say that because of the fact that a big board stock does not have half the manipulation that's involved in an OTC stock. So right at this point where I'm sitting right now, I would say that this was an attention grab. These 2 days of high volume and high price was a way that whoever was trying to manipulate this, rather than actually show pure interest in it succeeding, okay, gave retail attention. What's going to happen is you're going to have a major 0.003 to point, so that's better than a double in price. And if you look at the volume back here, it's better than a double in volume. Now, this double in price and double in volume is going to show up on the OTC everywhere. And bang, guess what? It is grabbing people's attention. Okay, so we'll skip that. I'm saying it's attention. Normally on a big board stock, it would be a change in mindset. So I'm not seeing the change in mindset back here in the beginning, that because it's an OTC stock. Now, the next thing I'm seeing here is what's called in Chartum land is a rounded bottom. And a rounded bottom right here where you see the price go back down and the price slowly come back up till it reaches this resistant level. Now, a rounded bottom, okay, because the prior price was coming down, okay, and it rounded down to the bottom again, and now it's coming back up. A rounded bottom is another continuation in pattern. Just like back here, this pole and pennant was a continuation, saying chart-wise it should continue up. This rounded bottom is also saying chart-wise it should continue up. Well, this time, once resistance Resistance is the point, the highest point reached in a price. Once this resistance point and this rounded bottom pattern got to this point, that was another decision point on the people involved. What is your mindset now? Okay? And what they decided was the mindset is this time we're going to take off. Now, was that a mindset of the people involved with this stock? Or was that a mindset change driven by someone manipulating? My personal opinion, because it's an OTC stock and the breakout from the resistance point was so large and the volume from volume interest going downhill to very low, jumping up, that my opinion would be that this was a manipulated pop to get all the attention that was looked for with this move, okay, back involved. Okay, so they're, the way I call it is somebody big back here wanted retail to notice this stock. Okay, they used that to get their attention, and then they walked it back up to get the word out that, hey, this is coming back, it's going to happen, and then they helped the emotion along by giving it a big day to break out. Okay, so we got our big day breakout. We got a very tiny, not really flag, but it is a flag. Normally a flag pattern, a true flag pattern lasts, I'm drifting now. A true flag pattern lasts 3 to 5 days, okay? And the run will, or the climb will last 3 to 5 days, and the retrace will last a minimum of 3 days, okay? But because this does not timing wise reach 3 to 5 days, and retrace wise did not reach at least 3 days, I'll call it a mini flag or a point of consolidation right here. Okay, so we have a point of consolidation broken out when it breaks tops resistance. Here we go again. We go again with another, I would say, big guy coming in. Lots of volume involved, lots of price involved, lots of emotion now involved. So we're taking emotion here, well-timed, emotion here, well-timed, hoping for emotion to build here, well-timed. So my overlook of this thing is it is being driven by somebody rather than by the small people that are involved following. Emotion is growing with this thing all the way up to this point where we're getting a true flag. Now, I mentioned a little while ago, a true flag normally has a climb at least 3 to 5 days. As you can see, it's actually 3 weeks. So emotion is climbing and climbing and climbing and climbing and climbing and climbing. And then we have our reversal. Okay, our reversal of at least 3 to 5 days to create a flag. We have 1, 2, 3, 4 days creating a flag. Now, a flag pattern is another positive pattern. It's a pattern that shows stepping up in an overall climb. The mindset of a flag, when you see a flag pattern on any chart, it shows you the mindset of the people involved in the stock. Okay, feel that this price will step up and step up higher and step up higher and step up higher. There will be periods of price climb and periods of retraces, and the retraces will be consolidation of that mindset. So we have a perfect chart, be it OTC or big board. We have a perfect chart pattern right now of a major flag. Okay? Now, just like the pennant back here, which a tiny pennant, which did not fulfill its normal charting requirements by breaking out north and going up, this one also, when it broke out, did not have enough mindset behind it to continue up, break resistance, and continue up. So what we're seeing right here, from the start of the retrace to where we're at today, what we're seeing is the mindset of a continued step up, not continuing. Okay, so we're seeing in here that the people involved in this stock right now are reaching another point of indecision. Is it really going to go up, or is it maybe not going to go up as fast as I thought, or maybe it's going, who knows? It's indecision. It's the same as you see back here, indecision. Only thing, because of the fact that there are so many people involved in the stock now, that indecision is fluxing more greatly. So the audience that's involved in this stock from here to here is much larger than the audience that was involved in the stock from here to here. So the fluctuations are much higher because it's an OTC stock, and OTC stocks are very emotional. We have more people looking at this stock here, so there's more emotion. We have less people looking at this stock here, so there's less emotion. So within 5 seconds, I looked at this whole darn thing and I said, okay, we're at a point of indecision. Okay. The big difference and the positiveness of all this is true value. I'm gonna have to get into the indicators, the technical indicators, and to try and give you the reasons of what I've just been expounding, all the bullshit I've been talking about. I use 3 technical indicators in my evaluation of the psychology. Let's step back one more. When I look at a chart, and I think I mentioned in the beginning, I don't see price action. I see people's actions. Okay? I see a mindset within the picture that the chart presents to me. When I see chart patterns, that is a historical thing that's happened in the past decades, which will allow you to feel that if the mindset repeats, what that mindset previously showed you will happen again. Okay, we have all kinds of flag patterns. We have a pennant flag, we have rounded bottoms, we have triangles, we have flags, we have all kinds of patterns. Okay, a flag pattern is a very strong pattern. Excuse me. I say that the chart itself and the pattern seen within the chart is the mindset of the people involved with the stock. I also say that the technical indicators, okay, which through the use of formulas actually plot graphically, okay, how the mindset of the involved players are trading or executing their mindset. So I call the charting mindset, the technical indicators, the psychology of the trade or the play or the move. So within the psychology, the 3 indicators which I use are the DMI, directional movement indicator, which is up on top. I also use the Scotch RSI, which is a combination of the stochastics, which is an oscillator. It will show you, an oscillator shows you overbought states and oversold states, and RSI shows the relative strength of a move. So by having no, I don't want to get to that. I just want to give you the general. This is a combination of overbought, oversold, and strength of direction. The next indicator I use is called the CMF, which is a money flow indicator. Now, the CMF has shows you the pressure of buying versus the pressure of selling. There's a zero line here, and as long as it's above zero, there's more buying pressure on the move, the price action, than there is selling pressure. So we have, within my technical indicators, the DMI, which is a trend indicator. We have the Scotch RSI, which is a momentum indicator, and we have CMF, which is a volume indicator. What is the momentum? Is the momentum towards being too much buying, or is the momentum towards too much selling? Is the pressure towards, is the money flow going into the stock, or is it coming out of the stock? Okay. Now, I use one overlay also, and the overlay I use are the 5-day, the 10-day, and the 20-day moving average. It just so happens that the Bollinger Bands I have set up have the center point as the 20-day. Now, the Bollinger Bands help me because I don't call them Bollinger Bands. I call them boundary bands. There's an upper line and a lower line to the Bollinger Bands, and normally what will happen in any price move, whether it be up or down, you'll find that these upper lines and lower lines usually bound the price within between them. Okay? So it's a little bit of backdoor assistance using the Bollinger Bands where the center line is 20 instead of just using another 20-day moving average. Okay, so I'm using the 5, 10, and 20-day moving average, okay, to understand the 5-day mindset of true value of the price of this thing, the 10-day true value expectations of this thing, and the 20-day true value. Okay, so we're going to say moving averages. People involved in the psychology of buying and selling any move all along through the calculations of moving averages are telling you what's the true value. What do these people that are involved really feel the true value of it is? Short term, because I am a swing trader. I trade chart patterns on 2-week cycles. So I want short-term moving averages. Okay? A lot of times you'll see everyone talk about the 50-day, the 100-day. They are long-term moving averages. Okay? Long-term determinations of what the people involved in the stock feel the true value on a 200-day average or a 50-day average. I use 5, 10, and 20. Now, you can look at a pattern many times, and when you're in a climbing situation, and then see price action which starts to channel or go down and come up and go down. Okay, you can once the climb stops and the price fluctuation starts, you can just in a second look at it in a second and determine what you feel. Everyone that's been involved since way back here, what they really feel the value of this stock is, just by looking at the middle of the swing. So you take it swung that high. There was a time when the mindset said it was worth this, and then there was a time when the mindset said it was worth that. So overall, within the fluctuation of the mindset, right in the middle is where they really feel true value is, right at 16 cents. Okay, as you can see, price is falling to 16 cents and price is climbing to 16 cents. 16 cents is what, from this time period on to here, everyone involved in the stock actually feels the true value is. On a 5-day basis, they feel the true value right now is 17 cents. On a 10-day, they feel the true value is 16 cents. And on a 20-day, they feel that is about 14.5 cents. But on the period from here to here, they feel it's 16 cents also. So the 10-day is very close to the same point as the price fluctuation, because the price fluctuation has been happening for the past 10 days of open market days. So where do I go next? Okay, I want to talk about, I've talked about mindset of people involved is seen in the chart. The psychology of trading that mindset is seen in the technical indicators, and the sentiment of that mindset is seen in the volumes. Okay? Sentiment is sentiment increasing, saying that more people and more people believe in their mindset, or are less and less people believing in the mindset. Normally what you'll see in a chart, as price increases, what you want to see, should I say, rather than what you do see, what you want to see in a chart is, if you see increasing mindset, you want to see increasing sentiment. You want people to believe more and more and more that their decision or thoughts or feelings about where this stock is going to go is getting stronger and stronger. You don't want them to think, oh man, I really think this is going to go up, and at the same time be buying less and less and less of the stock, because they're losing their mindset. That they're losing the strength of determination that they're correct. So in a run, in any price action movement on the chart, what you want to see is, you want to see an increase in sentiment. You want to see more and more volume involved, more and more people jumping on board, agreeing with the overall mindset of the price move. If you look back here, we'll go way back here. Well, that was manipulation. That was, I don't even want to talk about that. Okay, we'll go right back here to where it broke out. Where did it break out? It broke out right here. We'll go right back to where it broke out. Okay, look at the sentiment. The sentiment in this move is going up and up and up. And guess what? Right after that, here is a gap up, okay, and a high candle tail, and here is less volume. Now, what does that tell you? You got the longer a run runs, the stronger emotion becomes. When you see a gap up, okay, and a high candle tail, that is usually a gap up indication is usually it's called an emotion gap. People are so emotional at this point that they're buying the damn thing at open above what it closed at. But guess what? The number of people that feel that this thing's going to continue up, that are emotion driven rather than logic driven, okay, are less. So what we're seeing here is we're seeing a sentiment, overall sentiment of increasing determination that their mindset is correct. And then all of a sudden they're reaching a point where emotion is taking over the logic of the mindset. It's giving you an emotion gap with less volume. This is an indication of a changing point. A possible change in mindset and a possible change in direction, price direction. Now, let's take that and look back at our directional movement indicator. Okay, I'm going to cover directional movement indicator a little bit now. We have a green line, we have a red line, and we have a black line. The black line is called the ADX, the average directional movement. I consider the black line as being momentum, a momentum line. I consider the green line as yes, I like it line, and the black line, no, I don't like it line. So anytime if you're watching this indicator to see what the psychology of the trade that's taking place over time, okay, anytime you see the I like it line going above the I don't like it line, that means that more people like it than less, okay? But what is the momentum behind that is that the black momentum line is continuing down, okay? So there's no, even though back here there was a little change in overall mindset of the way that the people involved in the stock are playing or trading this thing. As you can see, the price is very tight, so you know it's all very tight. But the real breakout occurred as far as this indicator is concerned is when it went way up and when the momentum turned and went up with the I like it on top. Okay, so I use this indicator as an entry exit indicator, and I use the 5, 10, and 20 day overlays as an entry exit indicator of the psychology of the people that are playing it. Down below, I use the Scotch RSI and the CMF as support indicators for those entries and exits. Okay, now I'm going to get, oh, I'm sorry, I'm drifting. I was back here to show you about sentiment, seeing the sentiment change in this move right here, indicating to you that there's a strong possibility that there may be a price reversal because emotions got out of hand. Let's go back to that. In this indicator, you can see I like it, I like it, I like it, I like it. You can see momentum saying more and more momentum, more and more momentum. And all of a sudden, we get up here. And I'm going to talk one other thing that you can use within the directional movement indicator is oversold, overbought boundaries. Okay, I have boundaries of 15 and 50. Okay, so when momentum gets so strong that it reaches a boundary of 50, okay, people have gone from using logic in their like to using emotion. When you get too far to extremes, logic is less involved and emotion is more involved. Okay, so what this indicator up here is telling me, as I'm watching the momentum go up and I'm watching the people like it and like it more, guess what? Right around here, people are starting to like it just a little bit less. They're liking it just a little bit less. Okay, but momentum is still carrying through higher, all the way up to an extreme point of 50. Okay, when you have that extreme point of 50, usually what happens, this is through my past experience, when I see 50 hit in a momentum ADX line, it tells me that whatever does happen is going to happen big time, because emotion is involved in this, not logic. If a change in mindset or direction happens while it's within the ranges, the boundary ranges of extreme emotion at 50 or 15, okay, then you could expect the price action to change based on logic. If you hit the extremes, you could expect the price action to change on emotion. And when prices change on logic, they change gradually. When prices change on emotion, they change strongly. So I say that if the ADX line hits 50 or 15, okay, you're going to see a strong move coming. Okay, so we're going to take and we're going to wrap all this up together. We have mindset, positive, bang, we're hitting an emotion point. A motion gap up, a high spike, but less sentiment saying that we should be doing that. We're going to come up here, right here, where that occurred. Whoop, right there where that occurred. All of a sudden, my like starts coming down, but emotion continues up. Okay, so all these indicators are telling me what people are thinking or how they are actually the psychology of the trade of their thoughts. Their mindset, as long as the black line is traveling up with the upper line, whether it be like or if it was traveling down, if the red line was on top, then this run would be the opposite direction. You know. So we're right here. Everything that I'm trying to show you here was telling me that back here on this gap up day and lower sentiment behind the sentiment which was climbing was probably, if I posted on the board, I said you're probably going to have a reversal coming, because all these technical indicators of the psychology of how the people involved in the stock play are actually trading the stock play is saying that there's going to be a major change coming, and that major change is normally a retrace. And guess what? The retrace came, and guess what? The retrace came based on high emotion because an extreme in this indicator happened. Okay, now we're going to come back down and we're going to look at my other exit entry indicator. Anytime with the 5, 10, and 20, anytime the 5-day crosses, you can't really see it much around here. Anytime the 5-day crosses above the 10-day, that's an early entry signal. That's saying that the average true price over 5 days that the people involved in the stock is higher than 10 days. And when the 10-day crosses the 20-day, it's saying that the average expected true value of the stock is going to be higher than the 20-day, over 20 days. So more and more people, okay, believe that, or not believe, or they're actually buying and trading the stock higher. So when you see the 5, 10, and 20 lined up in order, 5 at the top, 10 in the middle, 20 at the bottom, that is a confirmed entry signal saying that everybody that's involved in this stock is trading this stock with the expectation that prices are worth more than they were 5 days ago. They are worth more now than they were 10 days ago. And they're worth more now than they were 20 days ago. So when you see an early cross of the 5 across the 10, that's an early entry signal. When you see all 3 of them lined up together, that is a confirmed entry signal. Now, we're going to go entry signals, and I think I touched on it up here with my other entry exit signal indicator, but I didn't really spell it out, is that when the I like it crosses above the I don't like it, that's an early entry signal. But the confirmed entry signal is when the momentum or the ADX line turns up with the line above it. So here, right here at this point, we have a confirmed entry signal in my entry exit indicator. And right down here, maybe a day or two later, is when the 5, 10, and 20 confirm entry in this thing. Okay, so first thing I look for is a chart pattern. The chart pattern on this one would have been resistance break of a rounded bottom, which would signal me an entry point in a play. And if you look at the entry exit indicators, right back here it gave you a confirmed entry indication. Right around here is where the 5, 10, and 20 gave you an entry exit indicator. So if I was looking at this, okay, I would have this rounded bottom play. I would expect this rounded bottom play to break top resistance because these two indicators told me enter and enter. And guess what happened? It got up to resistance and it broke resistance. Okay. Now, let's go down a little bit to the support indicators. I had, in my favorite indicators, 2 entry indications confirmed that I should be buying this stock. Right along between here and here. Right between here and here. My entry exit indicators are telling me I should buy this stock. I'm a low risk trader, so most people would have bought it back then, but I don't usually buy it until resistance is actually broken, because when resistance is actually broken is when you're proven to yourself that yes, this is going to go. So let's get down and look at this, what I call support indicators. I think way back in the beginning I told you Scotch RSI is a combination of an oscillator and a relative strength indicator. An oscillator will give you a overbought and an oversold indication, and the relative strength indicator will give you a center point telling you whether strength is falling or whether strength is increasing. Okay, so with this combination indicator that I love to use as a support indicator is I'll use this 50 line as a change in psychology of how the people's involved in this price movement. It's a change in psychology point. Okay, it could be considered an entry exit indicator, but with this specific TA indicator, there's a lot of whipsaw involved, so I normally would not personally buy the cross up or sell the cross down, because there's usually in this indicator a lot of whipsaw. Okay, so I only use it as support, and how I use it as support is the center line. Okay, if the RSI line or the black line, okay, crosses on a downward movement, I consider from here 0.05 to 0.02 as it's okay to be out. And if it crosses up, I consider 0.5 to 0.8 as it's okay to be in. Okay, so I'm saying if it's fluxing around here and here, it's okay to be in the stock. Okay, but if it's up here above 0.08, you should be in the stock. It's like the same as when 5, 10, and 20 are lined up, or it's the same as when the ADX momentum line is going in the same direction as the I like it line. Okay, it's telling you that the stock is being overbought and everyone is happy with this, and I like it. Be in the play. So if you're looking at this indicator and you're in the green, you should be in. That's what this support indicator is telling me. It's telling me that it's okay to be in from here to here, but you should be in from here to here. It's not okay to be in from here to here, but you really should be out from here to here. This is supporting your entry and exit signals up here. Now, onward and downward. The CMF. It's called Calkins money flow. Okay. I love it above the other money flow indicators because it has a center line. And to me, I call it pressure. I call it buy pressure and sell pressure. How much pressure is on the daily action over a period of time? Remind me later, Chuck, to talk about period of time within my indicators. Okay. Uh, my lines of experience for watching this indicator is zero, above zero or below zero would be selling pressure. Anytime you see this, it's selling pressure. You didn't see much selling pressure in any of this one, but if you look at another chart and use this indicator, you'll see as much selling pressure on the down moves as you do see buying pressure on the up moves. Okay, so it just in this case, okay, there's been a lot of buying pressure. That's determined by the calculations in the formula. Don't worry about it. But my experience tells me and has shown me over the years that if there's buying pressure between 0 and 0.1, it's weak buying pressure, meaning that the people involved weekly want to buy it more than they want to sell it. And if the buying pressure on the graph is between 0.1 and 0.2, there's average buying pressure. Okay? And if it's between 0.02 and 0.05, I'm sorry, it's not 0.2. 0.0 to 0.1 is weak. 0.1 to 0.25. I'm sorry, it's not there, but my line is 0.25. Okay? Weak below 1, average between 1 and 2.5. And any buy time you see this green buy pressure above 2.5, that means there's strong buying pressure. That means that everyone involved in the buying and selling of the stock that you're involved in is very strong. Okay? So you got very strong buying pressure above 2.5. You have average buying pressure between 1 and 2.5, and you have weak buying pressure, and vice versa below. So we're looking at this. We're seeing where am I going to go from this point? Okay, let's go right back to what I was talking about in my 5 seconds. 5 seconds is this. Oh, big mindset that this thing is going to step up because it gave us a flag. And flags usually come in threes, so you usually see one, then you see another one, then you see another one. In a true climb, in a true positive mindset, you'll see flags step up and step up and step up, usually 3 times in a row. Since this one did not step up the second time, that is why I see indecision from this point on. Okay? So let's go down and look at the support indicators. I'm getting really involved in this. Give me a minute to get myself set up on this. I got to redo this because of Chuck's stock charts. Okay. Now I can come down and look at my antidote chart. How I trade. Okay, I'm going to drift now. I'm going to drift into how I trade. How I trade patterns. I look for mindset. I look for patterns. Okay? A flag pattern is a very strong pattern to trade because, as I mentioned just previously, getting all jumbled up here, that a flag is a mindset that the price is going to step up at least 3 times, which means a very strong mindset of continuation. Okay, and how I trade flags. There is something called a fibs retracement. Okay? Fibonacci's mathematical calculations that determine direction and da 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 da. It's basic, simple, and clean. You go over here, you get the fibs. You start at the beginning of the move and you take it all the way up to the top of the move, and it will give you Fibonacci's calculations on how far this thing is retracing. Okay? Now, I have a rule of thumb over years of experience that if a flag pattern, okay, retraces to the 38% line and bounces and goes up, odds are that the top resistance line is going to be broken, and the overall mindset of the flag step up pattern is going to continue, and it's going to step up again, and luckily if I throw fibs on the next flag, it'll be the same way. So if the bounce in a fibs is very important. I use it all the time to evaluate a flag pattern. Fibs is very important. I use it all the time to evaluate a flag pattern. And how I use it to evaluate it is, what are the odds of this flag actually continuing as the mindset is showing me? Okay? So basically what's occurring is, if this thing retraces to the 38% line but doesn't cross the 58% line, experience has told me that the mindset is correct and this thing is going to continue up. Sentiment is going to continue up. Trading psychology is going to be executed to drive this thing up, etc., etc., etc. Now, if the retrace comes down and hits the 50% line or below, normally what will happen is the first bounce will bring you back up to the previous high, but won't have enough momentum for it to break through. A lot of times what will happen when you throw a fibs evaluation up on a flag, what you'll see is it'll come down here and bounce, and it'll come back up here and stall and reverse again. Now what you're going to see is it'll come back down, then it might go back up again, come down and up again. A lot of times when you break the 50 line on a flag, that pattern turns into what is known as a ascending triangle, which means you keep testing top resistance, but you never break through it until the third try. Okay, but you don't really know that. But the fibs is telling me if it bounced below the 50 line or at the 50 line, I would have concern on whether my trade was going to continue past this line. Okay, this one broke before it hit the 50 line, but it still did not break. Indecision. Okay, sentiment was not behind it. Why wasn't sentiment behind it? Why did it grow into indecision? And why did, when I saw this one, this candle, this bounce candle, which is great, I'm getting my bounce at before the 50 line flag. So when it bounced there, my mind was, my expectations from my evaluation up to this point was that, wow, that's great. It should continue all the way up and break top resistance. Well, guess what happened? Look at sentiment. Look at the volume flow. Okay, it was coming down. Okay, mindset is coming down. Volume is coming down. That's telling you there's less and less sentiment that this trend is going to continue. If volume was going up as price was coming down, trend was coming down, you would expect that trend to continue. More and more people, okay? So trend is supported by increase in volume, interest, or increase in sentiment. And what had happened here is, because I saw a trend coming down and sentiment coming down, I expected a reversal in mindset, and it happened. So this day and this day and this volume indication and this volume indication backed my theory up that because it broke here, that this thing should go all the way up because everyone be involved in playing this thing had a change in mind right where I expected it to happen and happen. And guess what? The next day, wow, it still kept going. It still kept going. But guess what I posted at the board this day? I think this was a Friday. I said, I don't like increase in price and decrease in volume. I like the chart pattern. I like the retrace. I like the sentiment in less and less desire or expectations that this retrace will fall. So everything was great. But this day had less volume, had less sentiment behind the positive change. So there was concern there. Well, Monday morning it turned around, and guess what happened? The sentiment was not there. This told me the sentiment wasn't there. This showed that the sentiment wasn't there. Bang, bang, bang. So here we are now. We're doing 2 days up, 2 days down, 1 day up, 1 day down. This is indecision. All in here is indecision. People that had a very strong positive mindset in this thing continuing and moving and running the way it should, presently is at an indecision point. And why am I seeing all that? I'm trying to explain with the use of all these indications. I see indecision up here because I see an extreme of emotion and a decline in momentum, and I like it. I see indecision in the entry and exit indicator here because one time the 5 is crossing below, indicating an early exit, and next time it's crossing back above, indicating an early entry. Okay? They're all happening, okay, at above the 20 line, so this is still a confirmation that you should be in the stock. And once again up here, the like is above the dislike, and the momentum is above the like, so you still have the same overall indication here that you should be in the stock. This is not saying get out. This is not saying get out or get in. This is not saying get out or in. This is still saying you should be in the stock. This is still saying you should be in the stock. The entrance and exit indicators are still the same. They're just in an indecision point. Okay, we're going to go down and look at our support indicators, and guess what? The support for this thing to continue this is now running. Maybe you should be out, and yes, you should be out. The buying pressure, okay, behind the price movement that we're seeing from here to here is less and less people wanting to buy, less and less people sure that you should be in. Indecision. Okay, so the last 2 weeks from the day it bounced till today, support indicators are showing indecision. Entry exit indicators are, the chart pattern, the actual price action is showing indecision, but the entry and exit indicators are still saying be in. So what's the overall evaluation of this whole damn thing and all this stuff I'm talking about is we have reached an indecision point. People should be holding, not buying, not selling until they see what happens. Wow, this was long. Okay, I think that's about it. I'm going to call it a night.